Bank of America has really been a symbol of the whole collapse of the financial system. Their stock went from $55 to $3 a share in 2009. They went through some disastrous mergers. Everything that went wrong in the economy, they symbolized. And in 2010, they got a new leader, Brian Moynihan. Moynihan had been at the company for several years. He came from Fleet. He was very little known outside the bank. A dark horse, not a good speaker, relatively inarticulate for a CEO, talks very, very fast. But he is I think, very underestimated and very misrepresented and misunderstood in the press because if you go back and interview people who've worked with him for a very, very long time, you see someone who is really a formidable talent in the business and I think is the person to lead that bank now. His view is we're not going to try to grow fast. We're going to grow with the economy, GDP, maybe a little bit faster. We're not going to issue credit cards to people who don't bank with us as their primary bank. We're going to do it only for regular customers who have their main checking accounts with us. We're not going to take those big credit risks. We're going to bring the credit card book down by 30 or 40% and get rid of all the risky credit card loans. Just let them run off. Even mortgages now are very safe, the way they're being underwritten, 20% down, 30 years, very good income verification, existing customers. Those are good loans. Make those kind of loans grow very slowly or relatively slowly versus the past. We're going to grow with our customers. We're not going to buy anything. No acquisitions whatsoever, and run the banks the way they were run before the big growth spurt. This is the way they were run in the 50s and 60s. Right? So it's almost a throwback to an earlier era. Now, he never expressed it that way to me, but that's what it sounds like, and that's what other banking experts reminds them of. At the same time, he's facing a terrible problem with mortgages. 5 out of the 6 businesses at Bank of America are making a lot of money. Credit cards, commercial loans, brokerage, investment banking, even credit, et cetera. They're all making a lot of money. But mortgages are taking half of it back, at least. And the real issue with mortgages is that no one really knows what the ultimate total number is going to be. So the challenge that he has is not to go out and raise new capital, to make good on his promises, and prove that he's really got the strength in these other 5 businesses to get through this mortgage crisis, which I believe he does. And he made a big step forward by settling with private label purchasers of mortgages for $8.5 billion. There was actually an additional write-down. The total of all the reserves, write-downs, et cetera, settlements were over $20 billion. But even though they were somewhat above his predictions, they put a very firm number on something that a lot of the analysts thought could go to $50 billion. So that took away a lot of the uncertainty. The stock didn't react much, but still there is, I think, a lot more certainty around the total number out there than there was before. So that was a good move. It's a very interesting situation. It could be a great comeback story. It's a little too early to tell, but I have a positive view of their future, which I think most people are on the fence.